Hello there. We have Emily Green on the show today. Emily is at Green Advising on Twitter. Emily, welcome to the show.
Thank you so much.
So it's good to have you on. And we like to start off the show by getting a background of your money relationship. And so, what was your relationship with money growing up?
Yeah, so I think I would describe it as scarcity. There just seemed to be a scarcity mindset in my household coming up. And I always sort of was just taught live within your means, just live below your income. And that I think is good advice in general, but I don't think it's enough advice. And so I really had to learn everything I know on my own, for the most part, including just basics of how to use credit properly, things like that. But I would describe my current sort of relationship with money as gratitude, as well as abundance, for like the best words to describe how I feel now. So I I do live well below my means, and that's where I think abundance is helpful. Certainly when you know you're not living paycheck to paycheck. It's a much better feeling, I think, than living paycheck to paycheck. That is very stressful, and I've been there before. But also, I'm just very grateful to have the ability, to basically live with that attitude of abundance. So,
Awesome. And I will tell the listeners you are a pharmacist by trade. And when you're talking about teaching yourself some of these things on credit and some of the other tools, like what tools or resources did you use to learn along the way?
um, aside from simply making mistakes, eventually I just started sort of searching online, trying to understand, why is my credit score not very good, and what are things I can do to improve it. And I started that journey so long ago, I can't honestly tell you any specific places I found that information. Um, but eventually sort of learned, any late payments are going to be a bad hit on your credit. Simply using a lot of credit, although that credit's available to you, you shouldn't use all of it. So that was another, mistake that I made, where I was using a lot of credit, and that doesn't look great for your credit score either. And when you're wanting or needing to borrow money, you pay for not having good credit.
How early on did you know you wanted to be a pharmacist, and when did you start actually learning about the financial side of your life?
Yeah. So my grandfather was a pharmacist, and I started seriously considering that as a career as a freshman in college. I knew I was going to be probably taking a science track no matter what I did, but I wasn't 100% sure what I was going to do. And he encouraged me to consider that. And the more I looked into it, the more I thought this does look like it would be a great career and a good fit for me. And I started that pre-pharmacy coursework, as a freshman, and ended up going to pharmacy school. And then after pharmacy school, I did some residency training, postgraduate residency training. And I think that's when I also started learning more about money and credit, and sort of how to manage finances, personal finances. And I stumbled a lot along the way. But I would say that roughly 2 years ago, I became very interested in why do I need life insurance, for example, and like why do people need that? How can it be used? How much life insurance do I need? Like all of those things I started really kind of looking into, and the more I started researching this, the more I realized there's a lot of value in life insurance. And I'm a huge proponent that everyone basically that's not retired, and is eligible, should have at the minimum a term policy, in place, as financial protection. And in some cases, there are other permanent types of life insurance that are wonderful options to have as well. Very, I would say, situation dependent. Everybody's, even like, your term kind of policies, there are a lot of different features and considerations for those. But once I started diving into that, I just really became fascinated. And I sat for the licensing exam and passed it in November 2021. I've been a licensed agent ever since.
Was there like a personal event you had that got you interested, or was it just someone trying to sell you it and then you started looking into it? How did that come about?
Yeah, so that's a good question. I actually did have I would describe it as an adverse experience with a life insurance agent. And when there are certain, I think, professions that are targeted by some life insurance agents because they may have the reputation of being high earners. And these people are often told they need like this huge life insurance policy that is whole life, um, and they can be very expensive depending on the circumstances of the insured and the carrier being used potentially. And I do think there is certainly a role for whole life, and it has some really incredible uses, but I don't necessarily ascribe to people just having a very large whole life policy with no kind of additional thought or planning around that. And eventually, as I was diving into kind of, it was a large premium I was making, premium payment I was making. And so once I started kind of diving into like, why is this so expensive? Why do I need this? I decided I didn't need that large, whole life policy, and ended up discontinuing that and kind of moving on to a term policy and a separate whole life policy that I'm using differently than the way that one was designed. Um,
So that's a good segue. How are you using that whole life policy now?
Yeah, so there's this really interesting use of infinite banking, or you'll hear it referred to in other ways like privatized banking or bank on yourself. There's a lot of variations of how it's referred to. But Nelson Nash was a life insurance agent that sort of, in studying whole life policies, realized this usage that it had. And he started sort of teaching other agents. He wrote a couple books actually, and showing that like in these permanent whole life policies, you build a cash value. And the company, particularly if it's a mutual company, will generally provide credits or dividends to the account. And that cash value can continue to sort of grow. And what the policy owner can do is essentially use it as collateral for a loan. And so they can have a loan with the insurance company, and this is essentially on the side of their policy. But that cash value serves as the collateral. And then you can borrow against that cash value. You can essentially use the money for whatever you want. You don't have to justify it. You don't have to apply, submit your credit score, do all these things that most people have to do when obtaining like a mortgage or a car loan or a loan for any other purpose. So you're free to use the money in any way you'd like. And the terms people generally find very favorable because they're essentially up to you. So you can create your own schedule of repayment. You can technically elect to never pay it back, but you, of course, impact your ability to borrow from that cash value in the future if you don't pay that loan back. So you just need to be mindful of how you're doing that, work with your agent. But businesses also can find this as a very favorable way to borrow because you don't have a scheduled monthly payment. And if your income is irregular, which happens often in businesses, you can essentially make payments on your own terms. And if you have a windfall, say you sell a vehicle, a piece of equipment, real estate, you can sort of repay loans with that kind of windfall of cash you have coming in.
And for full disclosure, I do have some of these policies. I am a proponent of this. But so how are you using your whole life policies?
Yeah, so my husband and I have some investment properties, and he's also self-employed, he's an electrical contractor, so he has a business, and then of course I have my life insurance business, and so we essentially loan our businesses money to reduce the debt inside those businesses. You can think of it as sort of a debt exchange, but what you can do is loan. You want to be the policy owner, I should explain, for these. If the business owns the policy, some of the benefits are sort of lost because generally, if a business owns a policy, it is paid with before tax dollars. And part of the benefit of these is that as the policy owner, you putting in after tax dollars means that all future benefits involved with this are tax free because after tax dollars went in there. But in essence, you can write an agreement with your business and say, Emily Green will loan, Foggy Mountain Properties, $40,000. It needs to be repaid on this schedule. And you do have to account for that interest on your end as income, any interest income you have. But when I look at my mortgage statements from the bank for those investment properties, I'm paying them off at a faster rate. So a lot of times people will, they look at their mortgage statement and they're like, oh, this just seems insurmountable. I'm going to make extra payments toward this because I want to pay it off faster. You could do the same thing with your personal mortgage if you wanted. And so once you have some cash value built up in your policy, you write, well, I guess you wouldn't have to write yourself an agreement for that if it's your own home. But you can essentially do the same thing where you almost do a debt exchange. So you would take whatever amount out of your cash value that you choose to borrow, pay it towards your mortgage, get that principal down further.
And the point of that is to basically swap those required fixed payments to someone else in exchange for more flexible payments into your policy. That's basically the trade-off or what you're swapping.
Yes.
Okay.
And I'll add that some benefits that this method has that I have not found any other comparable benefits to is if you set up your own payment schedule, because that's really what's recommended is to kind of discipline yourself, say, okay, if I was going to pay the bank this, I'm going to still make those same payments, against this loan that I've created. The way these policies are structured, you have what's called a paid up additions rider. There may be some variations in the verbiage of that rider, just depending on the insurance carrier. But that paid up additions rider allows any additional funds you put into the policy to essentially purchase more small chunks. You can think of them as life insurance. And essentially when that life insurance company, generally mutual companies are what's recommended for this, when they look at how much life insurance you have within your policy, those extra chunks actually yield you additional dividend payments. So you sort of increase your borrowing power over time because you're increasing that cash value. And you're benefiting from that. Whereas when you pay a loan toward the bank, you don't ever really, the only benefit is you see that decrease in principal when you eventually own whatever that loan was for, the house, the car, but you don't have additional capital to go borrow or anything like that. So
awesome. Yeah, thanks for bringing that down. So what's next for you? Will you continue being both, pharmacist and do the life insurance on the side? How will that look?
Yeah, I think for now, I really enjoy helping people not only obtain life insurance, but simply learn about it and understand it. And I truly believe people, when they see the value in something, they're going to understand why they need to keep it. And I think a good example was myself, like not seeing the value in having like a very large whole life policy. And that one, by the way, was not structured in the way that I'm describing these other policies are. And maybe if it had been, and I had been like taught about this years ago, I would have seen the value and I wouldn't have canceled the policy. But the way it was structured, it wouldn't have really been, wouldn't have made sense. So I think for now, I will continue with, being a pharmacist full time and doing this. And I work kind of week on, week off. So I actually do this for like 7 days on, 7 days off. But eventually my goal is to transition to this after I've essentially retired from being a pharmacist full time.
Wow. Well, as we wind down, I like to ask every guest, what's the best and worst personal finance advice you either heard or received?
I'm going to start with the worst.
Okay.
I recall being told by the same person that sold me that policy I ended up giving up to pull out of my company's match. And I don't really agree with that advice. And there are people to this day that will defend that type of advice and say, well, when the market's down, you're going to lose. And I'm like, you're also leaving free money on the table from your employer. And it's so I generally, if anyone ever asks me about their 401k or 403b or whatever they have, and how much should they contribute or whether they should, I usually tell people I would contribute up to the match. These plans do tend to have high fees, and you're, of course, exposed to market volatility, but it's hard to defend, I think, giving up that free money, so to speak. And then as far as the best, I think patience, having patience and time with any financial strategy are critical. So what I mean by that is I think it's been shown that being a day trader is not particularly profitable, right? People tend to lose more money than they make. I think the same holds true with many other financial strategies, whether you're building up value in a whole life policy, or holding some stocks, and wanting those to appreciate. You really have to be patient and kind of play the long game. And that's so hard. We're such an instant gratification culture. But there's a lot of truth. And if you, I think, really look at long-term illustrations of whole life policies, there's a point where your dividends are more than the premiums you would owe. I mean, but it takes a while in most cases to get to that point. But once you do, I'm like, this is really hard to argue with as an excellent, financial tool. So awesome. I hope that answers your question.
Yeah, absolutely. Well, Emily, it's been great having you on. Why don't you give the listeners a handoff? Where can they go to learn more about you or get in touch with you?
Yeah, so my website is greenlifeadvising.com. I am on Twitter, like you said, at Green Advising. I'm also on Instagram, Facebook, as Green Life Advising, and LinkedIn. And then I'll also just add my phone number in case you ever want to give me a call or shoot me a text. I'm always happy to schedule some time. And my number is 205-725-0250.
Awesome. Well, thanks so much, Emily. I think the listeners got a lot of value out of this and definitely gave us some things to think about. And we'll have links to those sources that you just mentioned. So thanks again for coming on.
Awesome. Thank you so much.